Hey, everybody, Economic Ninja here. I hope you are doing great. We're going to talk about the markets open to this morning because inflation keeps rising and there's some crazy stuff. So let's just dive right in. I'm going to explain what's going on because not a lot of people are going to understand it when they're investing in gold and silver, things like that. But we're going to talk about the whole gamut, okay? So here we go. Dow sinks 500 points after inflation reading hits 40-year high. And actually, the inflation reading was 8.6. And you guys saw yesterday, I put out a video saying that, yes, inflation is going to be higher. Is it going to keep getting higher? Yes, it is going to. Why? Because the Fed is not doing enough to fix it. Now, I have said before that I've thought that the Fed, I'd be shocked if the Fed raised rates in June. And if they do, I still do not see the Fed funds rate going over 1% before this entire thing blows up. Are they more than likely going to raise rates? Yes, they are. Are they going to raise aggressively in June? I do not believe so. Because the reason why is the Fed knows that as they keep raising the Fed funds rate, other things raise as well, like mortgage rates, credit card rates, everything, right? Everything starts to raise. And we've seen that in the mortgage industry. I mean, absolutely phenomenally, actually, since January, to stay in pace with the Federal Reserve's Fed funds rate. Why? Because lenders go, well, if we're going to loan into the real economy, as opposed to loan money to keep money on a loan with the Fed, that's really safe, right? They go, well, we want a little bit, the juice has got to be worth the squeeze, right? So they've got to keep raising and keeping it just above to where it's worthwhile to do it. If not, they won't loan money out. They will just keep money on loan to the Fed. Money velocity will cease, and that is really, really bad, right? So the thing is that as the Fed keeps raising their funds rate, and that's why I said I'd be shocked if it goes over 1%, because everything else, the cost of lending is going to go sky high, and people are just not going to borrow money, and the velocity of money will cease. All right. So yes, do I believe they're going to raise rates? I do. This is pretty incredible. There's a buddy of mine out there in YouTube land that's talking. His name's James, but you don't know anything other than that. Okay. He's saying that he's thinking that the Dow might see 1,000 points down today. And to be honest with you, I wouldn't be surprised if that was the case, because the fear is hitting the market. People are finally, it sounds crazy. I've been talking to you guys about inflation since this time last year when I said we were talking about lumber prices. I said they're going to come crashing down in July, and because July or August, because by August, September, people are going to care more about food and fuel prices, right? So if you think about it, August, September really was when inflation really started to wake up and pop out, right? Even before the Fed's 2% mandate was hit, we all knew that prices were starting to rise, right? The economy was opening back up. Everybody had those stimulus checks that had been pushed into the real economy, into the first leg of businesses that they had pushed the money into. Then the businesses pushed it back down, and it started to flow, right? So inflation started to hit the street. Now, today I want to explain to you guys, you're going to see all kinds of things down, right? Look at that. Oil's down, gold's down, crypto should be down. All right, cool. So I'm just watching this with you guys. Let's see, Forex. Okay, euro dollar trade is down. This is why. Go over to bonds. This is impressive right now, guys. The 10-year bond is up. Why? Because people are running. Let's just check real quick on the fly. The DXY. DX should be up. The dollar index, the Dixie. All right, so let's see here. Yep, Dixie's up because people are running to the dollar. Especially hedge funds are running right now. Why? Because on a bad day like this, they're looking for security. They're afraid of trading stocks that are going to be coming down. And so what's happening is the dollar is being boosted. It's being elevated, right? So this right here is why let's go back to it. Sorry, the Forex markets. This is why these are all trading down, because the dollar is up. Okay. Now, going back to this, actually, we're going to go back to this chart. I want you to remember, I hearken back to, I've been using that term a lot. I hearken back, a lark flying through the park. Sorry, old skit I used to do when I was a kid. The DXY is bumping at this 104, mid 104 level is bumping a trend line that dates all the way back to 1999, an actual resistance line. Every time it gets up to that line, if you were to draw a line on all the peaks, it smacks it and comes back down. I'm going to be honest with you. I'd be shocked if this blows past the resistance line unless we see some very catastrophic events in the near term. All right. Which would line up with Brett Johnson's dollar milkshake theory. However, I'd be surprised. I still think that we're in the dollar whippet theory. If you want more of that, just Google economic ninja and dollar whippet theory. I did the video back in, I think, July. All right. Now, since the dollar is strong, I want people to understand the 10-year bond is up. Oh, sorry, this one. This is what's scary. And as a matter of fact, you look at all these 10 years, and this is what is going to cause the 30-year mortgage rates to keep going higher and higher. And we're about to see a 1-year high on the 10-year. And I wouldn't be surprised. Oh, no, we're showing it now. Here we go. We are in it. So we're in the high. We are going to see, I believe, 6% mortgage rates by the end of June, which is super exciting and thrilling for anybody that's trying to hold on and wait for a home, because it is going to put even more acceleration behind the thought process for sellers to go, I got to sell now, because mortgage applications are falling off a cliff. People cannot simply afford to buy a home at these insanely high monthly payments, because you add the high price of a home right now, right? Because they keep going up, plus the added interest on the mortgage, and people just simply cannot service that kind of debt. All right. Now, another thing I really want you guys to understand here is when we go back to gold, because everything's selling off. You're going, why is everything selling off? It's because they're diving into the dollar, right? Well, as the DXY rises, the value of the dollar, and again, as there's people probably banging their fists, there's no value to the dollar. You are right. It's perceived value, correct? I want you to understand, when you talk about the Dixie, we'll drop back here, the DXY, this is a basket of currencies relative to the dollar, right? So, and right now the euro is weighed more heavily, or the most heavily weighted currency in that basket of currencies is the euro, okay? And I'm gonna be honest with you, I think the euro is a basket case because it just can't find its way. There's just way too many hands in the basket, literally, and in the bag. And so the dollar, of course, is going to shine next to it, right? But everybody's running into it. It is still the recognized world reserve currency. So other countries can be a part of diving into the dollar too for hedging themselves against volatility. All right. Well, now, as you look at all of these across the board, copper, platinum, and palladium, along with silver, everything's trending down because everybody's diving into this safe haven, okay? So this is what's really hard for a lot of people to understand, because they buy things just hoping they're going to go up. They don't buy them because of the fundamentals, all right? The fundamentals is there only so much of this in the ground, and the entire world is vying for it right now. But on days like this, when everything's selling off, it's because a lot of people hold paper contracts, and institutions hold paper contracts of gold, silver, and other commodities. And on days like this, where they're going, oh crap, this is bad, the inflation is rising higher and higher, they are going to sell those paper contracts, and they're going to move into currencies, especially the dollar. All right. So I want people to understand where we're at there. Now, if you look online right now to find physical precious metals, you're going to have a very, very hard time. Premiums are exploding, but they have been exploding in the last 12 years. Is it 12 years that I've been invested in precious? Yeah, 12 years. We have never seen a period of time, and we are now over a year-long period of sustained high premiums coupled with shortages. We've never seen this ever. 2015, I believe, was a year that comes to my mind. Beginning of 2010, I think it was, there was some elevated premiums because the price was just skyrocketing back there. Now we don't have the price skyrocketing, and we have, this is what's amazing. People need to realize this, because this is what happened during 2008. As the stock market started to come down because things were going to crap and we're leading into the fall, we are literally following, I'm going to jump right off here real quick. We are literally following the stock market down, the precious metals, just like 2008, is everyone's going, oh crap, and then Bear Stearns closed the doors, then Lehman Brothers closed the doors, then about another month later, that was it. Precious metals woke up. And why did precious metals wake up? Is because they went, oh, no. People went, we know what's going on. They just announced quantitative easing. That is what the Fed's going to do at a certain point. The markets keep tanking, and everybody's 401ks are getting hit. They're getting hit harder. They're going to wake up and go, all right, we know what you're doing now. You're about to print money. Even now, think about this, guys. When everything started in 2019, late 2019 to 2020, everything shut down. Stock market sold off. Precious metals sold off. Oil went negative, right? But then there was a point when they said, okay, we're going to start printing money. And gold and silver went, huh? And they went, boom. And that was really important for people to understand because, when all of this started, I want to say silver was between $14 and $15 an ounce. And it's sitting like what, $21 right now, which on a percentage basis is a really good increase when you compare it to major indices in the stock market and other investments, right? Gold as well did well on a percentage basis. Silver always beats it though on the upside, but it also beats it on the downside. But I want you to understand the magnitude of what's going on right now. Okay. We are not fixing inflation tomorrow. There is going to be some serious pain. Food prices are still going to keep going up. Keep your eye on food. And I'm not joking. This is not a joke. Store food up right now. All right. Food shortages are real and they're going to get gnarly coming into this late summer, especially because fuel prices are going to continue to explode. I cannot make this any more clear. All right. This is a thrilling time to be an investor because the swings are going to be magnanimous. All right. I'm being serious. But at the same time, they're going to be very scary for a lot of people that do not know what's going on. So with that being said, please share these videos because there's very few people out in the world that have been invested in so many different markets. And I don't want to toot my own horn, but I have been invested in a lot of different asset classes since the year 1999. And I've been through two major swings. Most people cannot actually say that. They have not been active investors before each of those corrections. All right. And we are going into the mother of all corrections. Why? First one was a stock bubble. Next one was a real estate bubble. This is a currency bubble. This is no joke, but this is where you can make the most amount of money if you are positioned right. Okay. But there's going to be those days where you buy something and it starts going down and you're like, you need to have that cash position on the side because as things happen, there are deals to be made and you buy more and more. All right. With that being said, none of that's financial advice. Just put it all out of your ears because I'm not a financial advisor. I'm just a dude with a bro hawk and a dream. All right, guys, that being said, I hope you guys had a great day. The Economic Ninja is out.